Hi, William Sheriff. I'm Executive Chairman of enCore Energy Corp. We're an active producer in Texas with two production plants underway, both brought on in the last 10 months. So we're quite excited about that. One of a handful of companies in the world with two production plants actually in operation. But we aren't limited to Texas. We're aggressively expanding our efforts in Wyoming. And to that end, many of you may know we have almost a 20% interest in and a further relationship with Nuclear Fuels Corp. And to that end, I'd like to introduce our new CEO, Greg Huffman. We're quite excited about Greg joining the company. I personally have known him for 20 years, one of the first people I met in the nuclear industry, and was just really quite excited to have the opportunity to have him join the team and lead up the efforts for nuclear fuels in not only in Wyoming, but also in Arizona, but with concentration in Wyoming.
Greg, how are you? You're in an airport, so hopefully you can hear us and see us. So appreciate you taking time out from your busy schedule to talk to us. Can you give people a bit of background on where you've been and what you've done in the past before you came here?
Absolutely, Matthew, and thanks for that introduction, Bill. And as Bill mentioned, my name is Greg Huffman. Recently joined Nuclear Fuels as the new CEO of the company. Nuclear Fuels represented a very exciting opportunity for me. I've spent the last 20 years on the capital market side of the mining business. I am a geologist by background, with a long history in the uranium. Bill and I know each other back from his Energy Metals Corp days when I was sitting on the brokerage side of the industry and helped raise some of the initial seed capital and early rounds of financing for that company, which went on to be a huge success in the uranium cycle of the early 2000s. I moved on from mining research into specialty sales role and spent the last 14 years doing that, 8 of which have been at one of the largest independent brokerage firms globally, with a very much a specialization, not just in mining, but in battery-related metals and energy-related metals, including uranium. So uranium's been something very close to my heart for my entire career, and I was always looking for the right opportunity to move over to the corporate side. And when Bill approached me about the opportunity with Nuclear Fuels, it was something that really resonated. And a lot of that is because of the relationship with the parent company, enCore Energy. It's a phenomenal success story in terms of bringing 2 operations into production in Texas here over the course of about 12 to 18 months. And really what Nuclear Fuels represents is the de facto exploration arm of enCore Energy, with a separate listing, separate management team, and a separate capital structure, which allows us to go out and investigate and pursue earlier stage opportunities for uranium exploration. Domestically within the U.S. is our focus, and particularly within Wyoming, where our flagship Casey project is very exciting and something that, from a geologist perspective, had me very much chomping at the bit to join the company.
Well, Greg, fantastic. You're in Wyoming, Utah, and Arizona, but I think today we'll kind of keep it on Wyoming. It seems to be like the epicenter of all things good for uranium in the U.S. At the moment. Let's talk about the brief. The new CEO on the patch. What are you here to do?
Yeah, and I think for me, the real opportunity here is we've got a window in which we can grow the portfolio. We've got the flagship Casey project, which we're growing at right now. And then beyond that, we've got other properties that we're advancing. However, we're not going to be done there. We really think that there's a good opportunity for us to really stake our claim in various basins within Wyoming, which are very prospective and significant past producers of uranium via the in situ recovery methodology. So that's something that we're really looking to grow the portfolio, and at the same time advance Casey and really aim to define an economic resource there over the coming 12 to 18 months, which hopefully we're able to sort of bring forward towards production, because we do see the geological potential similar to some of the surrounding operations.
Right. So technically and geologically, it's exciting, but there's also kind of a commercial imperative for uranium juniors at the moment. We're sitting in a kind of a lull, shall we say, waiting for the market to go again, which also creates opportunities. So is this a case of first things first, focus on Casey, or are you looking around and keeping a watching brief with your capital markets hat on?
It's very much a parallel track strategy right now. We are actively exploring with 2 drill rigs at Casey right now. We've recently received a much larger drill notification permit from the Department of Environmental Quality, which allows us to explore on a greatly expanded area on the Casey project. So we're actively underway there. But in parallel with that, Bill and I are always out and lookout for additional opportunities to bring into the nuclear fuels portfolio, with a focus on Wyoming and other U.S. jurisdictions, but always, first and foremost, making sure what is something that is potentially ISR amenable, because that really is where the strategic focus and background of the enCore group lies, and we really want to leverage that within nuclear fuels.
Right. Well, let's talk about the enCore relationship here. Obviously, they are front runners in the market at the moment. It gives access to capital. You're a capital markets guy as well. So does that combo give you an advantage over some of the other players in the Wyoming, in the state of Wyoming?
Yeah, very much so. What I really saw with nuclear fuels is you've got the capital structure of a junior company, but with the technical expertise and the cooperative portfolio of a much larger company. And so that was something that really sort of spoke to me. And I think that, the market really I think nuclear fuels, the opportunity lies is just market awareness. Right now, I think there's a phenomenal team. There's a great property package. There's a fantastic relationship with enCore, who's our largest shareholder at 18.3%, and incredibly supportive, both from a capital markets and from a technical perspective. And we're really working closely with them in terms of advancing both Khaleesi as well as our other assets. So there's a real opportunity here to get the awareness of nuclear fuels out there, and particularly as it relates to that relationship with enCore Energy. Maybe I'll hand over to Bill to speak a little bit from the enCore side, because obviously Bill is the chairman.
Yes, enCore is built primarily for production, taking known deposits and moving them forward. And, to that we've been very successful, but it's not exactly the same team. You need to take the initial steps of exploration and proving it up to that point where you need the development. Rather a different team, chemical engineers, production engineers, mining engineers, that sort of thing. And certainly market experts in the, sales and marketing of the product, the yellow cake. So it's fit in ideally with us. We've got our own small exploration team in Texas that's working diligently to move the projects ahead. But most of those are what you would consider in a conventional mining situation, which of course we're not. We're in in situ, but nonetheless, it takes a great number of people to move the development phase along. And so that's where we really have our expertise. Yet we want to be aggressive in these other primary jurisdictions. Certainly our only view is at Nuclear Fuels. We have the Gas Hills project that's moving ahead through permitting, as well as working on the Dewey Burdock project, which overlaps the state of South Dakota from Wyoming up in the northeastern part, rather large deposit. So, but we're really happy with the relationship here. We've got a project that, quite frankly, it's the largest exploration project in the U.S. With the KC project that Nuclear Fuels is formed around and working diligently on. The results have been highly encouraging, but the trend's over 40 miles long. It's just an enormous project, and then the company was fortunate enough to get an existing database of over 4,000 drill holes, so it's not starting in the dark with an idea. It's certainly an advanced project, but still one that takes a dedicated full-time effort of a major team. And to that end, enCore didn't have the bandwidth to do that. Very great confidence in the team there in the field, and certainly at the leadership that Greg brings.
Can I just ask, with regards to Bill, you've done this a couple of times, right? Into slightly different markets, and this is, I think people have got different, views on the kind of type of market we're in right now. Is it easier? Would you rather be doing what you've done in the past in this market than maybe the type of markets that you were operating in before? Is this a good time to be a uranium junior? Bill?
Absolutely. I mean, what we're experiencing the last 4 months is really the first correction we've had since the uptick started really in 2020. So first correction arguably in 3.5 years of any significance. We've had week-long corrections. We've had, panic sell-offs, that sort of thing, but they've righted themselves almost immediately. This one, I think, coincides with the summer doldrums that are fairly typical of most resource stocks. Vast majority of the years, the summers, go away, sell in May and come back after Labor Day. But, and I don't think this is any different. And then you couple that with the fact that most of the European fuel buyers are on vacation for a good 6 to 8 weeks out of the month, always in the summer. Not to say they're the only ones. The North American fuel buyers are typically gone for a good month of that as well. Historically, the volumes are quite low in the summer. We're seeing that continuing. So, some of the investors in the uranium sector may not be used to the typical market cycle in a metallic commodity such as uranium, and then have it come back. Oftentimes they have a doldrum in the summer, and that's the end of the game for a while. I think this is quite different. We're looking at a multi-decade opportunity here. This is just a ripple in the market. While the market's been in the doldrums and arguably declining significantly into this market correction during the summer, we're seeing contracting prices still remaining robust and at their highs. Certainly, when you're looking at the collared environment where we set price collars both on the low side and the high side, we're seeing numbers that were better than the ones we were able to get when spot was at its highest 4 or 5 months ago at 115. So I think that certainly, tells you the health of the market. It's certainly robust underlying. The fundamentals, if anything, have gotten better. There's certainly some murkiness and questioning about the Russian situation. A lot of confusion over deadlines and waivers and 10X's position, which i.e. Mr. Putin's position and Washington's. And then, I think it's fair to say there's been a slight bit of turmoil in Washington, D.C. of late. And I don't see that really reckoning itself anytime soon. So nor will I think there'll be a great deal of clarity on the Russian end until there is either a suspension of shipments, even though they're trickling through, given the other geopolitical issues in the world, that be around the Black Sea, and of course the developments with Kazakhstan. I mean, there's just a myriad of events. It's a very difficult market to understand. There's a lot of noise in it, if you will. But nonetheless, all of that tends to, when you look through the surface of it, the fundamentals of the industry are intact, robust, and there's been nothing come along that's done anything other than enhance the need of it. When you start looking at AI and those sort of things, we aren't talking about 10 or 20% need in the electrical grid. We're talking about 100, 200, 300% increase on the electrical grid. So what if they're off 10%? What if they're delayed a year or two? It really does nothing to the nuclear thesis except embolden it. So it's a different market. So is it better or easier or more fun? Certainly the 04 to 08 was a rocket ship and a great deal of fun and a great deal of learning to be involved on the beginning stages of that and having timed it pretty well with the group we were with. But this market's got a lot more legs, and this is more of a if you're in the industry, this is a career type opportunity, whereas the other was a trading opportunity, maybe an introductory opportunity. So I think they're quite different. This one's certainly a lot healthier. There is probably a lot more capital in it now than there was last time. There's going to be a tremendous amount more capital come into this. We're still seeing the generalist funds in the U.S. and elsewhere come in and really start taking a hard look at the sector, and not just as a in and out type of play like we experienced in 05 to 08, but really a fundamental core piece of the electrical grid, and quite possibly the largest piece of it going forward if you look out a few years. So it's a much more mature audience looking at it in that regard. Money that doesn't typically go into the resource sectors, but looks at companies from a proven longevity with cash flow, earnings, EBITDA. These sort of analytical tools are starting to come in and actually be employed by the larger funds. So I think that's a really great opportunity.
Okay, but tell me. Yeah, I mean, I think we're all violent in agreement that the supply demand fundamentals are fantastic for this sector, and if you're in this sector, you're happy, and if you're not, you should be in this sector because there are no fundamentals like it. We agree, but I want to understand the optionality here because for instance, you've spun this out and say, right, we're focused on production. These guys are going to take these things through to some kind of development phase, and then maybe we take our back end rights and we take we've got 51% back end rights, and then we'll take it from there, guys. He's saying that basically, if you own enCore, you should also own Nuclear Fuels because of the closeness of the relationship that you've got going there. Because, or do you act like some of the kind of other Canadian companies we've seen? I think Fission, F2, F3, F4 now, continuing to spin out and allow people to make money that way. What's the working relationship look like in the future for you guys, Bill?
I think the key is that's a very good question, Matthew. Thank you for that. It is different than most of the models. May appear similar in the initial stages, but very, very definite different ends. we're actually, in essence, creating not only the spinoff, but a feedstock or a pipeline of projects to actually put into our production profile. And enCore, once again, is all about production. So while we've got a healthy production pipeline inside the company now, we want more, and we would like more after that. So the model works well, and with our back end right, it would certainly benefit Nuclear Fuels for us to exercise that. It's a unique opportunity for the smaller company in that they have a built-in pathway to production. Of course, success has to precede that and prove out a resource of certain sizes to trigger our back end. But there are very few companies, if any, I'm not aware of any others, whereby the parent company that kicked it off, kickstarted it, actually has the opportunity to come in and fund the junior to production, thereby creating a heck of a arguably, how many companies do you know with sub 50 million market cap that I think in this case about 30 million have actually an opportunity or a realistic prospect of going into production, and the list is very short. So that's the compelling opportunity for Nuclear Fuel shareholders, and that obviously smaller price stocks, it's easier to get a bigger percentage gain off of them. It's nice to find a stock that's in essence just starting, if you will, with a low market cap, promising project, and someone standing in the wings that's a proven producer that's ready, willing, and able to take the next step with the project. And not just this one, but we'll certainly look at other opportunities down the road.
Right, and obviously we're sitting with with Bobcat and Boot Hill and Lisbon Valley and Moonshine, etc. There's stuff in the background already. But as I said at the beginning, it kind of feels like Wyoming's open for business, and certainly in terms of the ISR component. Are you willing to back additional either acquisitions through whatever funding mechanism, an opportunity in Wyoming, or do you think you've got enough in the portfolio, or they have enough in the portfolio?
Well, I think clearly the door is open, but obviously our support. When Greg came on, he purchased a significant piece of the company with his own cash, which is a healthy endorsement. And then I think following on that heels, enCore kept up its pro rata interest in the company as well, and so I think that's as good of an endorsement as you can get with those two events. And I think we clearly have an established team there through Nuclear Fuels. Certainly isn't our team, but it's our farm team, if you will, in terms of the next projects to come up to the majors. And we've got an all-star leader now, and very good qualified field geologists that have worked on these type of deposits. So enCore's built its history on the preceding company you mentioned on M&A. So, I'm not going to tell you that we aren't looking at M&A. We aren't looking at other opportunities, but certainly we're backing Nuclear Fuels and what they get their teeth into, and not only this project, but several others in the States as well.
Yeah, I just wanted to build on sort of the relationship with enCore a little bit. And Bill characterized it well, but one thing that sort of really attracted me is obviously enCore is in production. It's navigated the Lassonde curve very, very well. Nuclear Fuels is a reset of that Lassonde curve. So we're here, looking for new discoveries. We've got, an incredible array of historical information on the property. As Bill mentioned, over 4,000 historical holes. But it's important to note that the Casey project was not consolidated under single ownership last cycle. So back in that 2000 cycle for uranium, it wasn't held under a single banner. So really did not see the sort of concentrated focus exploration that you really need to on a district scale. And that's really what this project and what attracted me to it. So we're right here for new discovery. I see incredible potential based on historical data, and that's something that Bill to touch on, just because of the database that we do have access to through Bill and others within the company. There's a huge resource there from an information perspective for us to build our exploration programs on, which we're employing now, and under a consolidated Casey project that is under single ownership now, and really I see great potential for discovery that's going to exceed that hurdle rate that Bill mentioned that would allow enCore to exercise the back end. For me, that's a success scenario for Nuclear Fuels shareholders. And really, I think that's something where, as Bill outlined, I've been doing this a long time in terms of looking at the structure of various option deals, joint ventures, earnings. And to be honest, I've not come across one that's more attractive for the junior company in the relationship. with being carried to production for a 49% interest on the success scenario and being paid back for 2.5 times the exploration expenditures. It's a very, very good deal for Nuclear Fuels shareholders. So we think there's potential for a large discovery. We're out there chasing it now, and would be thrilled if enCore was to back in and one of the things too, I guess, Athabasca Basin is a phenomenal jurisdiction for exploration, and lots of our sort of Canadian focused peer companies are operating there. One thing that really attracted me to the Nuclear Fuels story was the fact that in Wyoming, we could get stuff done. If we do make a discovery, we're not looking at 10 years of production plus as you are looking at in Saskatchewan. Here we're looking at 2 to 3 years from discovery through to production. It's a very, very fast process, with the Wyoming being an agreement state with the NRC. That was very, enCore's demonstrated that in Texas, being an agreement state as well. We see the exact same opportunity. We're going to see some new operations come to production here in, of course, the second half of this year within Wyoming, similar in situ recovery methodology. And that's very much what we're focused on. So we see a great opportunity there. So it is something that I do think, we start off the conversation talking about Wyoming. I think Wyoming provides a huge amount of benefits when it comes to earlier stage exploration, if you want to see that through the LaSalle curve.
Okay, and you make several good points there. Let's remind people just of the numbers involved, because there's 3,800 holes in that data set that you're talking about, and I think Bill came on and talked at end of last year, November-ish, with regard on nuclear fuels, and talking about the kind of phase 2 drill program. Just remind us some of the numbers there in terms of numbers of holes, dollars spent, however you want to categorize it.
Yeah, the company kicked off last year with a phase 1 drill program, and it was really focused on a relatively small area of the overall KC project. Which was what the drill notification initially was limited to. That program consisted of 200 holes over 2 phases, and that was very successful in terms of focusing in on some of the historical mineralization. As I mentioned earlier, we very recently started our follow-on drill program for 2024 under a much larger drill notification permit. Basically taking that area from 7.5 square miles to over 300 square miles that allows us to explore, and from that initial 200 holes to 800 holes under the current permit. So we've very much been able to pop the clutch in terms of the ability to explore more broadly on the property, and we're very excited about that, using the historical information as a guide. Bill, I don't know if you have anything to add there.
No, it just keeps getting bigger in terms of what we identify as the target area, and even showing by the data that's driven that. We're well over 4,000 drill holes now. Keep finding bits and smaller data packages that are out there that you keep looking for and adding to the pile. So it, really, and as we work, we understand the geology of it better. You've got to remember that the programs, even though you had a pretty aggressive program back in the 70s, it was very fragmented. They had a big pulse for 2 years, and then it just stopped. And there've been fits and starts since. As Greg mentioned, I think last time around, Energy Metals had, maybe 2 square miles of properties in the basin. Every other Wyoming operator had a similar position. No one had enough to do really anything with. So it's really a unique opportunity that we're able to consolidate the district, and we're learning a lot more. We're butting up against the other side of the basin already. We've got the western side pretty well tied up, and just following it along. So the targets are abundant. The information is coming in, and we've got actually a smaller team that's all they do is kind of consolidate the upcoming information and add to it. And it's an ongoing machine. We don't have, as I understand it from Nuclear Fuels, they don't have 600 or 700 drill holes planned. It's an evolving, moving, active, dynamic exploration program, and very much results oriented in terms of focusing where the next round of holes go. And of course, with uranium, you get almost instantaneous uranium assays, if you will, or the value that you're getting subsurface. So it really enables a dynamic approach, whereas copper, gold, these sort of things, you lay out 20 or 50 holes, you go out and you drill them, you wait a few months to get your assays, you scratch your head a bit, and then try and figure out what you got and where you're going to go next. Very, very much different in terms of uranium, with that ability to have almost real-time knowledge as to what your values are, so it can direct your money's spent far better than you can in most of the other metallic fields.
Okay, and Bill, just I'm going to finish off with you if you don't mind. And Greg, in fact, Greg, come in, of course. But his question to you, Bill, in terms of, and it's Olympic year, so we're going to talk about handing over batons. Okay, so in terms of what you think you want Greg to be handing over to you, the baton, what does that look like? And more importantly, what should investors be valuing? I think Greg's mentioned a few things there, which people probably haven't taken on board, like the speed to permitting and the speed to production, etc. Right? But what do you want to see if you do this back in?
Well, I think this is clearly a case of results orientation. I mean, the whole thing is around results, and the truth indicator, or the drill rig, as some people call it, is going to tell you what you got and where you got it. But obviously, as I mentioned, by continue our investment, we're at the level we came in at. We're highly encouraged by it. You don't find this large of a viable exploration play, really, quite frankly, anywhere else in the U.S. Certainly not in the in situ arena. So, when you look at the prolific nature of the basin and having essentially the entire western wing of it to nuclear fuels benefit, I think that's an unparalleled opportunity. But you've got to see those drill results come out, and we're looking to we're expecting on the enCore side to see a pretty robust flow of information this fall, and even some late this summer.
Greg, do you want to finish off?
Yeah, no, absolutely. I just maybe expand a little bit. I'm here at the airport, and apologies for that, but it's because I'm on my way to site. I'll be spending the rest of this week at Casey, working with the team in terms of the targeting, going over the drill results today and coming up with a plan. We're really excited with what we're seeing. And yeah, the goal is to run hard and really hit the ground hard from an exploration perspective. And very excited with what we've seen in last year's program, and encouraged with the results that we're seeing so far. Look forward to getting those out into the market. I do want to make one point, though. The historical data just can't, the significance of that can't be understated. Most of this historical data, as it relates to Casey specifically, was done in the 70s and 80s. And really have to note that, the in situ recovery technology was just, being developed at that point and starting to be implemented. So really, a lot of the exploration that was historically done on the property was only targeting traditional forms of mining, i.e. open pit or underground. That's very different from what we're looking for. Now, that historical data, the context of that is incredibly important for help us targeting. But, just because there's been a lot of work done on the property doesn't mean that it was actually targeting what we're looking for. So it's a huge opportunity, and that's really one of the things that excited me about it. So, we've got, hundreds of millions of dollars worth of exploration data that we're incorporating and able to leverage on Casey. So we're really 2 or 3 or 4 years into the program when, it's a massive head start, which really benefits us from an exploration perspective. So using lots of different technologies, lots of different techniques to really, so I think we're going to be able to accelerate through that exploration and hopefully towards discovery.
Yeah, one thing I'd like to mention is, when you picture, just to give a general picture to your audience, imagine a string of pearls on a necklace that only has 4 or 5, maybe 6 of these pearls that are visible based on historic information. But the string or the trend has been well identified in terms of overall trend. And of course, like all of these roll fronts, it's very sinuous. That is like a meandering stream. It's not a linear deposit, but it has an enormous number of zigs and zags. And now imagine that string to be over 40 miles long. This is the scale that we're looking at there. So while there has been a lot of work, a lot of it's been directed, as Greg properly mentioned, towards conventional. Just the tail end of it, really, I think there was a handful of ISR tests to establish that the formations are amenable. Certainly we'll have to do more of that at some point, but just the scale of it so that your viewers have some concept. It's very long, and we're in essence uncovering those other buried pearls along this trend and connecting them. And, it's not going to connect solid through 40 miles. I mean, that's highly unreasonable. It'd be ideal if it did, but it's highly unlikely. But more likely, you're going to have several groups of mineralization that may very well prove to be economic along this large trend. And as I say, we continue to expand that trend as well. So it's, like I say, in terms of an exploration opportunity with great geologists in the field and really excellent leadership in the home office and in the field, frequently already. I don't think you could find a better exploration story.